Hello, everyone. Good morning or good afternoon, and welcome to this Investor Insights session focusing on impact investing in deep tech. My name is Thomas. I'm the head of startup and investor community at Hello Tomorrow. For those of us who don't know us, Hello Tomorrow, we're a global organization dedicated to unlocking the power of deep tech. We started our activities 10 years ago, actually, and since then we've organized more than 100 events around the world, and we help foster connections between stakeholders in deep tech, so entrepreneurs, investors, industry leaders, accelerators, researchers, public institutions, etc. We're currently running the 7th edition of our global challenge, the startup competition for early stage deep tech startup that receives thousands of applications every year. And through this competition and the Deep Tech Pioneers program that we're running for deep tech entrepreneurs, we provide actionable content, business opportunities, investment opportunities to deep tech entrepreneurs. Similarly, for investors, we provide investment opportunities and resources. And you might have seen our latest report that we co-authored with the Boston Consulting Group called the Deep Tech Investment Paradox, where we focus on the challenges, the opportunities, and the new models that are needed for a better deep tech investment ecosystem. And last but not least, we are also providing tailored services on open innovation for our corporate partners across all industries and technologies. But enough about us. I'm glad to give the floor today to 3 amazing funding partners and general partners of impact-focused funds who really want to make a difference while still making money. Our first guest speaker is Tove Larsson. She's from Sweden, and she's the general partner of Norsken VC. So Norsken is not only investing with a very strong impact focus, but they're also completely transparent about what they're doing, how they operate, and they're sharing a lot of very interesting materials and information to drive people to follow their path. So Tove, thank you very much for being with us today. Can you tell us a bit more about yourself and about Norsken VC?
Of course. Thanks a lot for having me today. And yeah, so shortly about me, started business, went to work as a management consultant quite early on in my career, went into impact, and I spent the last 10 years working with impact entrepreneurs in different ways, and the last almost 5 years with Norsken. And in very short about Norsken, we were founded about 5 years ago by Niklas Adalbert, one of the Klarna co-founders, with the ambition really to help entrepreneurs that are addressing some of the key challenges that the world is facing to succeed. And we do that in different ways. And we have the Norsken Foundation that are running impact tech hubs, started out in Stockholm, soon in Kigali, and we're putting the spotlight on impact tech entrepreneurs in different ways. And since 4 years ago, we're also operating a fund, an investment vehicle, investing in early stage impact tech companies. We just closed our second fund and are now running a 125 million euro fund focused on seed Series A impact tech investments across Europe. So that's in short about me and us, I guess.
Thank you very much, Tove. Our second panelist today is Christian Hernandez Gallardo. He's based in the UK and is founding partner of 2150. He's also the previous managing partner of White Star Capital. So 2150 is a fund with a focus on impact in a specific vertical, which is urban tech. Christian, it's great to have you with us today. Same thing, can you tell us a bit more about yourself and about 2150?
Sure, and thanks to Hello Tomorrow for hosting this. I've followed you guys for a while, and I love what you do. So 2150 is a new fund we unveiled in February. We will be over 200 million euros later this year when we do our final close. And we start by trying to make the world of 2150 a reality and investing in technologies that make the urban environment more efficient, resilient, and sustainable. And for us, the urban environment was the right place to start because A, it's big and growing, B, it's really bad for the planet. And there's technologies that can be deployed today that can start having an impact today while we continue to back long-term innovation that can come to fruition in 10 years' time. Based between London and Copenhagen, and we invest 1 to 10 million initial checks, so from seed to Series B, mostly Europe, but active also in North America and Asia.
Thank you very much, and welcome, Christian. And last but not least, Seth Bannon is coming from San Francisco. So it's a bit earlier for him. Thank you very much for being with us. Seth, you're a founding partner of 50 Years, a seed fund with a broad impact and deep tech focus. And you're passionate about helping PhDs become great entrepreneurs. Thank you very much for joining us. And Tantin, can you tell us a bit more about you and about 50 Years?
Sure, yeah. Hello, everyone. Thanks. Hello, Tomorrow, for having us. I basically always just wanted to do good in the world. I started off my life actually doing that through politics, nonprofits, got frustrated with the tools in that space, ended up starting a company to build better tools, which turned into a tech startup, got into Y Combinator, got sucked out to Silicon Valley and was just blown away by the speed and the scale of technology entrepreneurship. But on the flip side, I became a little bit disillusioned with what most people were focusing on. You know, you often meet a brilliant machine learning engineer here and ask her what she's working on, and it comes down to squeezing a few more fractions of a cent out of an ad impression. And I thought that was quite sad. And so basically got really obsessed with the idea of redirecting the speed and the scale and the potential of Silicon Valley and technology entrepreneurship globally towards the same sort of problems that I always want to solve through politics, things like the climate crisis or disease or malnutrition or connectivity, these really big global problems, which if you can solve them are often really great financial opportunities. And, you know, started exploring that, realized that there were already a decent number of entrepreneurs on that path who wanted to build, you know, 5, 10, $50 billion companies, but wanted to do it because they cared deeply about some problem that they wanted to solve. And then it was very clear very quickly that they had to choose between either investors that you know, also cared about solving big problems through business, sort of traditional impact investors, or the sort of, you know, more traditional Silicon Valley Sand Hill Road. And the first set, you know, were values aligned, but couldn't really help them build their companies. And the second set could sometimes help, but didn't really care about the mission. And so it was just clear that there was a need for a firm at the intersection of those two. And this was the origin of 50 Years. So we've been around for 5.5 years now. And basically we back deep tech founders, which just means you probably need a PhD on their team to pull things off, that are building companies that have both a path to $1 billion a year in revenue and also a path to massive positive social or environmental impact.
Great. Thank you very much, Seth. Thank you for being with us today. My first question maybe is, what do you define as impact investment, and what is the role of deep tech in your investment strategy? So maybe we can start with you, Tove.
Sure, yeah. So how we define impact, we probably have a quite broad definition of impact compared to more climate-focused funds. So we invest across all the 17 SDGs, and that's typically our kind of first lens of how to guide us through the impact DD process, that we check the potential investment versus those SDGs and see if we have a first hit sort of match there. Then we go much deeper into the impact assessment, and we will come back to that later on, but we use the theory of change framework and the impact management project to guide us through that impact DD. But basically a quite broad definition of impact. And when it comes to deep tech, I'll be honest and say that we started out thinking that we would spend our days investing only in software companies, because that's basically where we come from, and it felt closer to us, but really have realized during these 4 or 5 years that to really be able to tackle some of the complex challenges that we see around us, we also need to be brave enough to invest in really complex solutions. And for some of these complex challenges, I mean, the software solutions will not be enough to address. So therefore, we moved into deep tech and started out small, working together with investors that really knew the space and have sort of, I think, increasingly increased our interest and appetite for this kind of investments, which has been really great journey to be on.
Great, thank you. And in which kind of, in which areas of deep tech are you investing in? What technologies? Do you have any specific focus?
Yeah, so I mean, looking at our portfolio to date, we've done 1 food tech investment, a lab-grown fish, and we're definitely looking increasingly into that space. We've also invested in quite a few hardware-related components, so in mobility, like electric aircrafts, electric autonomous trucks. We've also invested in data center solutions to increase the energy efficiency that is used for the cooling of data centers, so liquid immersion cooling solutions. So just to mention a few, but we're probably more focused on kind of finding the greatest impact solutions, and the deep tech will be kind of more a result of finding the best solutions rather than looking for a specific tech, if you see what I mean.
Okay, great. So it's quite broad and agnostic investment thesis in terms of technology. And that's interesting what you said on starting with a focus a bit more on software and gradually going to deep tech, because deep tech can probably have the most massive impact than just software companies. And I've read recently just a report from the Danske Bank and Deal Room. So we're focusing a bit more on the Nordic impact startups, but that found out that within the impact startups, the deep tech ones had actually higher and more rapid conversion rates to Series A than non-deep tech ones. Which seems to indicate that more investors have actually realized that in impact, deep tech ones are actually the ones with the most like the brighter perspective and the most chances of success. Maybe so, Christian, the same question for you. So what's your definition of impact? And since you have a bit more like a specific focus in urban tech, why did you choose this focus, and what type of companies, what type of technologies, and what type of impact are you looking for within that focus?
Yeah, it's interesting because when we started raising the fund, we never used the word impact in our marketing material, and it was maybe a bias that impact equals philanthropy, like Seth was saying, and we wanted to be positioned as a venture capital fund seeking venture capital style returns by backing technologies that made the world more sustainable and efficient. If you ask me what I define myself at, I would define myself as wanting to do some good for the world through technology, and I guess that means that I am an impact investor. So for us, as I said in the introduction, we focus on the urban environment, and it's a vertical, but you could argue it's the world's largest vertical. It's half of the world's population. It's the majority of the world's resource consumption, energy consumption, waste generation, CO2 emissions. And we map out kind of the big problems of the urban environment, from cement, it equals 8% of world CO2 emissions, steel, which is another 7%, heating and cooling of buildings, which is massively wasteful, and is majority of the consumption of energy in urban environments, all the way to keeping people that live in urban environments healthier and safer and secure. So air pollution is expected to be linked to 1 in 8 deaths worldwide, right? And that's higher in urban environments. How do we tackle that? So we do these deep dives around the problem sets, and then we learn about technologies that could mitigate that. So as an example, we started with the biggest problem, which is cement and concrete. We looked at technologies that could actually address that, from direct air capture in cement factories, to there's a company in North Carolina that uses genetically modified bacteria to create bricks called Biomason, to precast chemistry that it changes the way the CO2 generation, the heat requirement of cement. And through that, ended up finding and investing in a company in Canada called Carbon Cure that injects CO2 into concrete and is the most deployed carbon capture and use technology in the world. They're live in 400 plus factories. And we're applying that same methodology to steel, which is a bit harder for VC, to be honest. I'm personally looking right now at cooling and refrigerants. It's pretty scary when you start looking at the chemistry of what keeps us cool and how much that demand is going to grow in the next couple of years. And so I'm talking to PhDs at Princeton and Oxford, to entrepreneurs using new technologies, to large companies trying to change the way the AC units work. And so some of these by default will be deep tech, i.e. scientific breakthroughs that are now being commercialized. And to change the urban environment, you have to accept that you'll be investing in physical assets, hard stuff that exists in built world. And so we don't shy away from hardware or from chemistry. Biology, I'm a failed pre-med student, so I need some help with that. But I think that's a fascinating area of innovation as well.
Great. Thank you very much. And it's true that it's basically the biggest vertical that you could choose. Seth, maybe the same question for you, but you already answered quite a bit during the presentation. So if you have anything else to add, and otherwise, maybe I want to talk about the due diligence process. So how does your process differ from a more traditional investor one? Like, do you use a specific impact framework? Do you look at specific metrics? So what do you look for in the startups the first time you met them and when you do the due diligence process?
Yeah, sure. And I will add something just on the deep tech side, because I'm sure there's some deep tech entrepreneurs listening. And you know, we initially started focusing on deep tech because it was where the most exciting innovation vis-a-vis solving these big global problems was coming from, right? You know, I think a lot of these grand, really hard problems require grand, really hard technologies to solve them. But we learned over time how to communicate it also as an advantage just vis-a-vis financial returns. And it's been super useful for us. And so maybe it'll be super useful for some entrepreneurs or other investors in this space. And so, you know, one thing and this was predominantly useful for us as we were raising from LPs, but maybe useful for entrepreneurs raising from VCs too. You know, as software entrepreneurship has been, you know, largely commoditized, right? So, it's now so easy to build a software product because so much of building a product has been democratized that, you know, a couple high school students over a weekend can build and launch a SaaS application with paying that can accept paying customers, because they can just pull in from different APIs and different pieces and put things together, which is fantastic. And it's led to an explosion of innovation in that space. But it also means that most of the sort of easy wins in software have already been won. And it also means that if you happen to find a niche problem and can come up with a solution for it, you're likely going to have a lot of competitors really fast once people see that what you're doing is a good idea. And on top of that, there's just been this explosion of VC dollars chasing software startups, and so you might argue that there's sort of fewer and fewer opportunities and more VCs chasing it. Whereas if you look at deep technology companies, they don't suffer from the same sort of commoditization, right? A lot of these deep technology companies are developing core IP that is required to be able to do what they do. And the beautiful thing about IP, which is true in deep tech but not so true in software, is that you can protect it. You can get a governmental entity to say you and only you can use this IP, which is a pretty nice defensive barrier if you're talking about building a good business. You can also create these talent monopolies, right? So, you know, if you're working at the intersection of machine learning and enzymology and, you know, high throughput robotics, there might only be 50 people in the world that really have a core expertise at the intersection of those disciplines. And if you're a great founder, you can go out and you can hire 30 of the 50 over time, and now you've basically sucked all the talent oxygen out of the room, which again leads to really nice sort of defensive barriers. And on top of that, just by nature of doing really hard things, it's not like if someone sees your idea, they're just going to be able to go and copy it. And so we actually think that deep technology is not only going to be where a lot of the sort of innovation comes from that solves these big global problems, but also where most of the financial returns are over the next 10 to 20 years. And so in terms of how we diligence teams and founders, like most actually investors at the early stages, most good ones, I think, we actually focus predominantly on the founders. It's, we back teams at the pre-seed and seed stage. So typically there's some janky prototype built that kind of works at the lab scale, but is not at all ready for commercial scale. And then we, give founders their first 750 to 1.5 million, and then we help them build their company. And at those early stages, it's still predominantly about the founders. And so we really dig into who they are, where they come from. Our favorite question to ask is why, WHY. We just run through all the decisions they've made in their life and just keep asking why. And what we're looking for is not only sort of founder market technology fit, right? But we're also looking for founders that have a deep, passionate connection to the problem that they're solving, because it makes them far more resilient when things get tough, and things will definitely get tough. And then we like Norwind use the SDGs as our sort of list of what the big problems are in the world. And so of course we want to see that the startup has a path to really making a huge dent, if not eliminating an entire category of problems. We don't really like incremental improvements. We like the really big big wins. We want companies that can have $1 billion a year in revenue. So as Christian mentioned, we don't believe that impact investing needs to be concessionary. We actually believe that if you have a really powerful impact mission that can augment your financial performance, and your financial performance can augment your impact mission, and those two things can sort of synergistically help each other. And then the big thing for us is the technical diligence. So once we sort of check off all those boxes, we will typically bring in a PhD from our network who did their, if we're looking at say enzymatic DNA synthesis company, we'll bring in a PhD in our network who got their PhD from Harvard in biophysics and did their dissertation on next generation DNA synthesis techniques to really do a proper technical diligence. And where we're maybe unique there is we're comfortable with a lot of technical risk, right? So we believe that the role of deep tech early stage investors is to give founders money to cross off technical risk. This is actually what venture was invented for back in the days of semiconductors, but it's really gotten very far from that. Most VCs these days just want to find a SaaS startup that's kind of growing nicely and just give them more money to hopefully grow even faster. We're very comfortable if we only see a 20% chance of the technology working. Because if there's a 20% chance that the technology works for the amount of money the founders think they need to build it in the amount of time they think they need to build it, but the outcome, if it works, is fantastic for the planet, and potentially hugely valuable financially, that's what venture is made for. Right? Venture is supposed to be a very high risk sort of asset class. And so we basically want to find that 20% path. And as long as we see that, we're happy to partner with the founders, so long as all those other boxes are checked.
Okay, thank you very much, Seth. So you're going for really also obviously like impact-focused startups that can solve really the biggest problems. Maybe, Tove, do you have the same approach in terms of the due diligence and in terms of how you assess the impact that the startup can have or will have in the future? Can you tell us a bit about the process at Norscan?
Yeah, I'd say I'd echo Seth on a lot of what he just mentioned. And we typically start with the impact assessment, so that comes first in our process. In addition to that, I think we're very similar to any other VC out there. And as an early stage investor, it's definitely about the team and the size of the opportunity and the size of the challenge. And to build on Seth's definition of the unicorn potential, I think we're looking for what we have defined as impact unicorns, where the business can not only become what we traditionally mention as a financial unicorn, but can also positively impact more than 1 billion people. So we're trying to aim for unicorn status on both of those dimensions. But other than that, can only echo Seth in his description.
So the same thing for you as well, like what Seth mentioned, is that there's no compromission between the impact and the financial returns, that must go like hands in hands.
Yeah, I think we've defined our scope so that we want to invest in companies where there is a one-to-one relationship between impact and financial success of the company, so that for every unit of product or solution or service that you sell, you would generate 1 unit of revenue or profit and also 1 unit of impact, so that you have a strong linkage between those two, because that will eliminate the friction that some people suspect there is in this industry. I think to build on kind of why we think these companies have even a greater chance of generating those superior returns, as Seth also mentioned. I think we definitely see that these companies have a competitive advantage in terms of attracting talent, attracting consumers, and also investors to a greater extent. And maybe we'll come back to that, but we really see that also the traditional solely financial-driven investors are increasingly looking at these kinds of investments where the impact is almost traded at a premium. So we definitely see a superior or advantages for these companies that we think can drive financial returns that are sort of outsized versus any other.
Thomas, can I chime in there? Yes,
sure.
We finally figured out after 5 years, I think, a great way of saying exactly what Tove was just saying. So as Christian mentioned, everyone thinks impact is concessionary. Oh, if you're going to try and have a social mission, you're going to sacrifice financial returns. And it's been obvious to us and obvious to Tove and obvious to Christian that that's not the case. And we finally just, I think, figured out a great way of explaining why a company that has a mission to solve one of these big problems should outperform. And so basically the way we say it is this: if you have two companies and they're equal in almost every way, right? The teams are equally intelligent and equally fun. The problem's equally interesting. The pay is equally good. The financial opportunity in terms of the long-term value of the equity is equal. There's only one thing that's different. One of the companies is just doing something neutral, say selling sneakers online, and the other company is solving the climate crisis, right? All things equal, one has this big mission to solve a global problem and one doesn't, and they're both competing for the same candidate. Which company do you think is going to be able to out-recruit, right? And when you think about it that way, it becomes quite obvious. Well, of course, if all things are equal and one of them has a big mission and one of them doesn't, that one's going to be able to out-recruit. It's going to be much easier for that company to get press. It's going to be much easier for that company to raise money, because not only can they tap into the normal pools of money that just care about financial performance, but they can also tap into these pools of money that now care about ESG. And so if you think about it that way, all things being equal, but one company has a big social mission and one doesn't, it becomes clear how that social mission can cause outperformance.
Exactly. Thanks. I'm going to steal that,
Please do.
explanation, Seth.
That's a great explanation. Christian, do you agree with everything that has been said? And I wanted also to ask you a question. Are you looking with those, Seth mentioned that obviously the IP, when you're a deep tech startup, that you can protect. There's a lot of things like being an impact-focused startups that are linked to the financial returns and the higher financial returns that you can get. Are you also considering like different types of business models or revenue streams? I'm thinking about the carbon market, for instance, when you're talking about investing in startups that can reduce the carbon emissions. Is that something that you take into consideration, for instance?
Good question. And it's funny, Tove talks about impact unicorns. I came up with some cheesy term called gigacorns a couple months ago, and now people are using it, which is really funny. But for us, gigacorns were companies that could mitigate a gigaton of CO2 and be commercially viable, right? And a gigaton of CO2 is a lot. So they're very, very mythical. But we don't only focus when we're analyzing the impact on just CO2. We have like 2 portfolio level metrics that we feel most of the portfolio will roll up to, which is CO2 equivalent, mitigated, capture, or used. And the second being millions of tons of waste saved, upcycle or recycled. And then company by company, we apply SDG specific KPIs that we can track. So that's really easy for a company like CarbonCure that reports tons of CO2 abated every single week. It's harder for companies that we know have an impact, but don't yet measure it. And I can't ask a team of 10 people to go implement reporting just for me and my LPs. So we're actually hiring an environmental scientist or 2 to go work with the entrepreneurs to integrate that tracking and reporting, which we think will be beneficial to the company and to the future fundraising and the future hiring, but also important for investors like us that want to track that numerically and report that back. So that's very much part of the due diligence. The challenge is that there's not that many frameworks that can help you forward project. I mean, we can barely forward project the financial forecast of a seed stage company in 5 years' time. So how do you forward project the CO2 equivalent forecast in 5 years' time? But at least we need to have comfort that they can make a dent in a big, big problem. The interesting thing is there's a bunch of new revenue streams that could come online. So carbon pricing is the one you brought up, and it's actually something that we look at, but we don't underwrite. In the sense of some of these companies, if their technology works, will be capturing or reducing CO2 equivalent by a lot. And if you assume that the price of that ton of carbon is currently 40 euros in the ETS market, and that goes up to 100 euros, that could be a significant revenue stream for the company or its customers. But we can't price that today. The market's all over the place. It's voluntary. It's non-liquid. So we'll look at that, but it'll be challenging for us to back a company that could only exist if carbon pricing, carbon markets become a reality. And yet some of those companies can also be commercially viable. And on top of that, the carbon pricing then makes it really, really appealing and make it outperform. And in terms of IP, we see it as a good defensibility, but unlike biotech, I don't think it would be the only thing we would underwrite, right? It needs to be, yes, it's great that you have brilliant PhDs, they have this novel way of doing something, defend it, but then it's still the same execution risk of any other technology company. You need to take it to market. People need to find the value and want to pay you for it to deploy it. And if you deploy it more, that has measurable impact and sustainability metrics.
Thank you. I want to go back to like what you said earlier on the difficulty to assess the impact for certain type of startups, like depending on the impact that they have and the lack of framework. Tove, I think that Norsken has developed quite a few tools that you use internally and that you also share with everyone. You have your impact report that you share with everyone about like what impact is your portfolio having. Can you tell us a bit more about like what tools do you use and why did you develop those tools?
Yeah, absolutely. And first of all, I should mention that we haven't invented any of the tools that we're using. So we've only picked bits and pieces of all the great frameworks that are already out there. So what we're using is really a combination of the theory of change framework, which really breaks down kind of the impact into the output, the outcome, and the longer term impact. And we also use the impact management project and their different dimensions of impact to assess any case that we're looking at. And then what we do is to early on in our process, we do this workshop together with the founders of the company, where we together define the long-term impact and the shorter-term output and outcomes that the company is looking at generating. And we also actually set targets from these different perspectives for the KPIs that we have identified, and so that we can actually track how they're doing versus what we're hoping to see kind of when we exit. And we've also, together with our LPs and especially the European Investment Fund, linked the financial incentives of the team to us reaching those impact targets, so that also the incentives for the team is aligned with both achieving the financial objectives and the financial return that we're looking for, but also the impact targets. And we're really, you're very kind in your introduction, Thomas, but we also realize that we're really early in our journey. So we've chosen to share what we have, like I'd say, first and foremost, to get input and thoughts from other people in the space. And if we can contribute in some aspect, that's great. But we would love to see even more transparency and collaboration around these themes in the industry, because it is super difficult. So yeah.
Yeah, I think it's ever work in progress, and as you mentioned, there are like more and more funds and investors that are interested in impact and interested obviously in following the impact that they have.
Yeah.
I wanted to talk about we've seen that there are like more funds being created with an impact focus in the last like 2-3 years. Even more so perhaps in the last year, like since the pandemic hit us. We have like new funds in Europe, new funds in the US. What's your view on this situation? Do you think it's a long-lasting trend? Do you think it's linked more to the current situation, or do you think that investors are realizing, like you all said, that impact-focused ventures could actually have quite high financial returns? Maybe Christian, what's your view on all this?
Yeah, so first of all, I was actually going to say that it's very interesting to see the difference between kind of my old traditional generalist VC world and this world, and how collaborative it is. I mean, 50 years, you guys do this amazing speaker series that I get to watch on YouTube and learn about crazy science. The Norsken's running effectively YC for climate and inviting everybody to it and publishing everything online. Like, everybody's willing to share their frameworks and their models and share deal flow actually a lot more openly than I've seen in generalist VC. Because I think we all realize we're mission aligned, and there needs to be, there's been a lot more in the last year, but there needs to be dozens more. So I think there's 3 trends. One is, I don't know, maybe it's midlife crisis, and maybe that was the reason I decided to change tack. But I think people are realizing that we need to act, and we need to act like soon. So you have rock stars of the VC world like Chris Sacca coming out of retirement and launching lower carbon. You have USV, which you could argue doesn't really need to change the strategy, launching their dedicated climate fund. You have generalist European funds very vocally talking about their desire to back climate technology companies. So that's kind of the traditional pocket of money now pivoting towards impact. Then there's teams like, I would love to hear Seth's story about raising Fund 1 for 50 years, because I'm pretty sure that's very different to today, where there are a lot more LPs wanting to find and back sustainable technologies. I know of a global bank that raised a $320 million climate tech fund of funds in 6 weeks. And it's just the appetite to focus on this sector maybe got exacerbated by the fact that we all sat in lockdown on Zoom screens for a year, and we realized that we needed to tackle bigger problems than a coronavirus, and that there's technologies that can help facilitate it. And then finally, the deal flow, the question we got asked when we got start fundraising, are there enough companies to actually go back in this space? And what's been even surprising to me is that, yes, not only are there enough companies, there's some amazing repeat entrepreneurs that have done it before that are now turning their attention to try to use their technology chops with new innovation to address big problems. So I think you combine all those three into this moment in time, and that's why it feels like something's changed in the last 12, 18 months.
And what was your experience raising the fund for 2150 in terms of compared to, because you raised another fund with the White Star Capital earlier in your career?
I raised two funds, and I was foolish enough to try to raise a brand new one from scratch. Insane would probably be the word in terms of we will have closed our fund in under 12 months, which, White Star 1 probably took us 24 months. And once we actually announced the first close, literally large global institutional investors came out of the woodwork saying, "Hey, where you been? Why didn't you call us? We'd like to give you money, please." And that just has never happened before in my fundraising experience. And it was not like the impact team. It was actually like the private equity team that had a sustainability mandate. It was groups like EIF who have a dedicated focus on sustainability within their broader mandate, right? EIF is 30% of the asset class in Europe. It was family offices who care deeply about this, and within their kind of portfolio, the one thing they felt that was lacking, they've done their ag tech, they've done their energy fund. There's not that many funds focusing on the built world and sustainability. So that, I think, was unexpectedly a differentiator for us. But yeah, it's been crazy.
Great, but it's crazy good then.
Yeah, good crazy, yes.
Yeah, maybe before going back to you, Seth, on your experience, Tove, because the latest fund was roughly raised at the same time as 2150, and you're both in Europe.
Yep.
Do you share the same experience? Is it a similar story for you?
Yeah, definitely. And so we raised a much smaller fund in 2017. And back then, I guess that was around the time that Seth, you also started out. And back then, at least we saw that, the interest from institutions investing in this kind of asset class was really low, I'd say. So we had the opportunity to work with 4 unicorn founders who really had the trust to back us and our thesis. So it was a completely different climate back then, at least for us and in Europe. And then when we set out to raise our fund that we just closed, the interest was completely different. So we definitely saw a lot of interest from the life and pension funds and other institutional investors, as well as the family offices and so on. So definitely an increased interest, and that's great to see. So very positively surprised.
Great, thanks. And so Seth, from the other side of the Atlantic, so what was your experience? Like you said, it was a bit earlier, and how do you see the the mindset of LPs nowadays in the US?
Yeah, so our first fund, which was a super tiny fund called like a prototype fund in the Valley, it was a sub $5 million fund. Took us almost a year and a half to raise. And I can tell you that there was not a lot of receptivity to, well, either the deep tech or the impact, and you can make a lot of money angle. I think a lot of people thought it was sort of in the clouds that you could do that. And a lot has changed since then. I think we're fortunate to have back some great entrepreneurs who make us look really smart, and so we now have a track record. But also, as you mentioned, there's a lot more people that are aligning their values with their investing, and I do think that is going to be a sustained trend, because once you do it, you don't want to go back. It's the same with employees that align their careers with their values, right? It's just, once you get a taste of it, and once you realize that you don't have to sacrifice financial returns or being involved in interesting projects with good people, and on top of those three things, you can also help improve the state of the world. The psychic capital that you get from that is really addicting. And so we find that once people start investing in this way, they really like it and they don't go back. And same with once people start working in this space, they don't go back. And so so we think it's going to be a pretty consistent trend over the next at least decade. And like Christian said, we need 10 times the number of funds and capital that are investing with this kind of lens. It's still somewhat sad to us that the vast majority of our startups, when they go on to raise their Series A's, are raising from purely financial investors. They're raising from the Andreessens or Sequoias or founders funds, and there's a lot to love about those firms. That they're really smart and they can often really help founders, but they don't quite see the businesses the exact same way as the founders see it, right? In that they're really looking for cash on cash returns, and that's it. And why are they raising from those funds? Is because there just aren't enough amazing funds that are investing with an impact lens that also have the full capabilities of helping as much as sort of the traditional Sand Hill Road funds are. And so that, for me, that's a sign that we need 10 times more capital in the space. And and just as an example, when we raised our first fund, took a year and a half for basically $5 million. Our most recent fund is $80 million. We were oversubscribed in a fraction of that time. And so I think that the overall sort of dynamic in the market has shifted in a really great direction, but we need even more. And by the way, you folks in Europe are way ahead of the United States. It's funny in that I think probably 90% of institutional investors in Europe have ESG as at least one filter. It might not be the main filter, but it's at least one filter that they care about. And 90% in Europe, it's probably 10% in the United States that have it as a filter right now. So, the United States actually has a lot of catching up to do in this regard.
Thank you. And just following up on what you said, so what are the type of LPs that are investing in impact-focused funds? And what are they looking for? Are they really interested in the impact for the impact? Are they interested in the impact because of what you said, impact equals financial returns? Is it a bit of both? Can you tell us a bit about your LPs and what you see happening?
I mean, personally, I think a lot of savvy LPs are starting to buy the argument that you can drive better performance with impact. In the same way that, in the early 90s, there were a bunch of funds that were like, hey, this internet thing is going to be big. And you don't need to love the internet, but if you want to make money, you should probably back internet companies. I think, that argument is starting to catch on because there's more and more data available, right? So I think there's actually, and we love this, there's purely financially motivated investors that are saying, hey, if I just want to make more money, I should invest in these companies that are solving these big global problems. And that's fine. We like that because, at the end of the day, if you're going to use market forces to try and do good in the world, you've got to use market forces to do good in the world, right? And so in the same way that, we tell our companies that they need to align their impact model with a profit model, and that's what will allow them to scale to the market. We think it's really, really great that there's purely greedy investors that are chasing impact now, because that's more money into great companies. And so of our own LP base, is, we were very fortunate in the most recent fund to be able to be sort of choosy, and we actually turned down some institutional investors that we didn't feel quite aligned with. But we decided to raise predominantly from unicorn founders. So we've got the founders of Dropbox and Spotify and GitHub and Unity and Supercell and Klarna and Minecraft and Snowflake and TransferWise and Skype, and just a bunch of really, really amazing companies, both in Europe and in the United States. And I would say probably 20% of them are backing us because they think it's the best way of doing good with their money. Probably 20% are backing them because it's the best place they think they can get returns on their money, right? So in a purely greedy capacity. And then the rest, which is probably 60%, are just really, really happy that they can make money and do good at the same time. And they really like the fact that they can get both. And we think that's great, right? We love the fact that there's money in this space because people see it as the best possible way of solving some of these big global problems. We love that there's people that are just backing these important companies because they think it's going to make them the most money. And of course, we love people that want to make money and do good at the same time.
Thank you. Is it the same in Europe? Like, do you agree? Do you have kind of the same type of LPs in your fund? Maybe Christian?
Yeah, so I think the difference in Europe is we don't have the pensions, right? Or sorry, we don't have as many endowments investing in venture. Like the endowment for Rice University, I think, is like twice the size of Oxford. So that hole gets filled by government entities: EIF, British Business Bank, the Danish Growth Fund, KfW. And those, they have effectively allowed the venture capital industry, generalists and specialists, to survive. But they take a long time, and they literally they know today what VC they're going to do in a year. But they back the majority of the funds. So we actually have the Danish Growth Fund's new Green Future Fund as one of our anchor LPs. We will announce some other sovereign funds when we do the final close. Then we have institutionals that, this guy has a portfolio of 20 of the world's best VCs, and he chose us and evaluated us as a pure VC investment that was kind of thematic around sustainability and urban tech to satisfy his big Sand Hill Road large investments. And then finally, we have similar entrepreneurs from some of the similar companies who I think are also in Norsken, who also actually want to co-invest. I think they're doing these fund investments as deal flow. They've been lucky enough to have significant exits and are sitting on cash, and they feel that they want to put the cash into companies that can have a material impact. And our job is to go hunt for them and show it to them, and they can come in directly. And by the way, they can be extremely helpful to the founders because they've gone through the voyage before. And then the one other difference is US, we don't have any US endowments as LPs. Actually, to be fair, we didn't really try. First time team in Europe with a vertical thesis. It's already a pretty high bar to get US endowments to invest in Europe for first time funds. Maybe we'll try for the next time.
Thank you. And Tove, is it the same for you? Yeah.
Yeah, so with the fund that we just closed, we do have a majority of institutional investors. I think the Swedish state-owned SumInvest, which is similar to the growth fund in Denmark, and EIF plays a huge role in sort of kickstarting new funds, and are both really interested in the impact space. So I think those were really important to start off our fundraise. But then I think the majority of our investors are institutional ones, and we're really happy to see the life and pension funds to invest in this asset class. And I think the impact was definitely the door opener in those discussions. But then the second question was, okay, so what about the financial returns? And they are definitely not ready to compromise on that. And I think we had some really interesting discussions and really kind of share our thinking that we've already been discussing here in terms of why there should not be compromised, rather the opposite. So it's been a great journey, and also to see those investors really invest in this asset class. And I think if we can move those big bucks, I mean, that's definitely when we'll make the big difference in the longer term perspective.
Yeah, but I think, like you all said, like in Europe, the institutional funds are a bit more impact focused, and within Europe, the ones from the Nordic countries are probably the ones that are the most impact focused as well. And so hopefully the trend will grow in other countries and other regions as well. Maybe just before going to the question from the audience, I had one last quick questions regarding how are you viewed by other more traditional investors? Like, for instance, when you invest in a venture, how is it viewed by potential co-investors? Do they view it as, okay, you're an impact-focused fund, so I stay away from this deal, or is it something more positive? Yeah, what's your view on that? Maybe Tove, you can go on.
Yeah, so if you had asked me that question 4 years ago, I think that I had to answer that some of the financially driven VCs kind of shied away if we were in the round. I think nowadays it's completely different. So we typically prefer to invest alongside strong financial VCs, and they see us as a strong collaborator and really kind of a stamp of approval on the impact dimension that they also see as a key strength of these companies. So today, it's really, I think we're great in great collaborations with the usual suspects from the VC scene.
Thank you. And Christian and Seth, do you agree with that? Is it the same for you?
Yeah, I think there's and I mean, even the big, there we go. I think a lot of the generalist investors have defined, the large European generalist VCs have created their own sustainability framework. Some of them have talked publicly about it, some have not. So I think the one thing that they don't want us to do if we're in a round is to impose obligations on the small team to have to do all this work to satisfy our sustainability reporting requirements. I mean, you only have 10 people, you're gonna take one out full time to go do this reporting just for 2150 when he could be doing 10 other things. So I think that's been the only concern that's been raised. But in general, I mean, we're looking at deals with all the traditional guys, competing with them. And then deal flow is pretty active from mission aligned earlier stage funds that see us as like the next partner for the companies that they're backing.
Yeah, and I think for us, I actually don't think we're judged at all on the impact side, which is nice, because I think we need to get there, right? We need to get it so that people aren't seeing funds that are just backing these companies that are solving big problems as, it's just an impact fund. I think the two probably things that are most on the top of other investors' minds. One is, if they're backing a team, there was probably a deep technical diligence done, and so we don't have to be as worried that this team's going to be a Theranos, because we know 50 years really digs deep there. And then two, they know that the founders are going to have a firm that's going to like roll up their sleeves and really get in and help when times are tough and help accelerate when times are good. I think that's probably maybe even the main reputation, at least we have in the Valley among the small sort of circles that we run in here, is we have 5 entrepreneurs on the team, and we really love actually just providing, like, our favorite part of the whole VC world is the support part, right? It's the after you actually back a team, helping them manifest their vision in the world. And I think a lot of, especially smaller angels or smaller funds that don't necessarily have the capacity to really dig in and help founders, feel a little bit more comfortable if we partner with a team, because they know they're going to get that kind of support.
Okay, thank you. Maybe so we have 5 minutes left. So last actually was my last question, and a question as well from Zorica. So if you can quickly answer, what do you see as the greatest challenge for the development of the impact space going forward? So it's like examples in data availability, impact measurement, greenwashing. In terms of the impact investing space, is it like the mindset of GPs, LPs? It's related to deal flow. What do you see as the greatest challenges? Maybe Seth, can you go first?
Yes. So and this doesn't apply to anyone on stage, which is very refreshing, but still the vast majority of money in the impact investing space, and I mean probably 90 to 95%, is not comfortable with any kind of real risk, right? And impact investing has existed as a field for a very long time, but it's been about backing the sort of low risk incremental improvements, right? So the cash flow businesses in the developing world that are slowly improving the economic situation of a small group of people, and those are great businesses. Those are like, I'm really glad they exist. But some of these big global problems that we have require like incredibly audacious, ambitious, very high risk endeavors to solve. And impact investing, the community has not been comfortable with that for a very long time. And I'm glad that there's now a minority of impact investors that are saying, we're going to bring the sort of traditional Silicon Valley mindset to impact investing, right? Where we're very comfortable with high risk, so long as we also have the promise of incredibly high impact reward. But overall in the ecosystem, I think this is still the biggest impediment.
Thank you. Tove?
Yeah, I think two things that I'll mention in this context. First of all, I think we need to see even more kind of success stories and role models that really proves that this thesis holds, and especially in the VC space. So looking forward to several IPOs of impact tech companies going forward. I also think the impact measurement part cannot be underestimated, and I'd love to see kind of that standardized framework coming together so that it's actually possible to further kind of compare and contrast different impact investment opportunities. So those are two observations.
Thank you. And Christian, quickly.
Time. We don't have enough time to deploy the stuff that we need to deploy to actually make this world still be around. And it's not just one technology. We need dozens of different technologies tackling dozens of different problems. And for that, we need 10, 100 more people like us trying to take those risks.
Thank you. I guess that also answers, like Arvin's question was asking, like, is it a good sign that the recent pour of money in impact investments will benefit a lot of innovative solutions hitting the market, or just selective winners, and it will kind of like a bubble that will burst? So you're saying that, yeah, we need a lot of different solutions tackling all aspects of like basically all the problems that we're facing at the moment. Do you all agree with that?
Yep, definitely.
Yes.
And the last thing, very, very quickly, what technology solutions are you most excited about in impact investments? Seth?
I'm crazy excited about synthetic biology right now. I think that, you know, I mentioned the 90s before. It looks a lot like the 90s in terms of the core infrastructure of read, write, edit, and design have just been put in place over the last 5 to 10 years. And the number of things that bioengineers can address and the speed at which they can address it has just been increasing, and the costs have been dropping. And so I think basically every big problem that the world is facing, synthetic biology can potentially have a role in solving. And that's the one area of technology that I'm most excited about currently.
Thank you. Christian?
I'll say the same, even though I'm not investing in it yet.
And Tove?
Yeah, I'd say kind of the next generation food system, as well as the transitioning into the electrification. I think those two are the key trends that we're looking into and investing into right now.
Great. Thank you very much. So this concludes our session. We've run out of time. Thank you very much to all three of you and to all of you who followed us today. That was really, really insightful. The replay will be available right afterwards, and it will be also posted on our YouTube channel. And if you want not to miss any of our next discussions and next panels, you can register to our monthly newsletter called The Core. And our next webinar is actually quite related to impact because it's on carbon capture technologies. It's on June 8th, and it will be with Antoine de Lafargue, the Managing Director and CTO of Total Carbon Neutrality Ventures, and Bas Sudmajor, Climate and Energy Transition Lead at the Boston Consulting Group. So I hope you'll come to that webinar as well. Thank you very much again, Tove, Christian, Seth, and yeah, have a good afternoon and a good day if you're in America.
Thank you, Thomas, and thanks, Tove and Christian.
Thank you. Great to meet you. Bye.